Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. It's been a tough day for the equity markets, and most of the selling has taken place in the IT space, and that's really something of a theme that we've seen in the recent past. But if you think about it, quite a bit of the bad news has started dissipating. I hope that I'm not jinxing anything by saying that. So the question that I'm asking today is, how do you look at small cap funds? And this is where a lot of you actually do have your investments, and you've probably seen an underperformance in all probability over the course of the last 1 year or so. So how should you react? Is this time to double down on those investments? And how should you approach the space? Which schemes should you choose? I'm joined by Prableen Bajpai, the founder of FinFix Research, to talk about just that. Prableen, thanks so much for taking the time. First of all, are people asking you, or have they been asking you, should I pause my SIP in a small cap fund? Should I sell my small cap fund investments? Is there further downside from this point?
Hi, Alex. I think not really sell, but definitely I think returns have been disappointing. So you have to do that hand holding that over a 2 year period. Also, if we look at the returns, they can be negative for a lot of schemes or very low. And these, Alex, are definitely times when people start to ask that perhaps I was better, if not ask, at least think that, they were better off with a fixed income product. So small caps have had such a great rally that, this correction has, I think, taken a lot of investors who were invested at decently high levels. And when you start off with the SIPs, which are at high valuations, you have to go through that process, little pain period. And, to investors who are out there and who've already invested, I think it's very normal for SIPs and small caps to give you low or negative returns for a 2 or 3 year period as well. So if you've already invested, just stay put.
Stay put. But let's talk about some of the schemes, right? So first, let's lay the context to say that a lot of schemes, when small caps were doing incredibly well, took the call to say, we're going to pause fresh investment, especially through the lump sum route. So let's take stock right now. How many are still closed? And we know, for example, that ICICI Prudential opened up once again, and they don't have the largest AUM, just over 8,000 crore rupees last I checked, right? So they took that call. They've opened up. So what is closed right now?
Right. So SBI has been one of the first fund houses, Alex, and they did this long back in 2020 that they still have the 25,000 capping. A lot of fund houses then followed in 23, 24. Kotak was there, then they reopened again. Nippon was there. Tata is still close to lump sums. And ICICI, I think, is the name, because fresh investments were paused in March of 24. And it is also a name from the fund house where their chief, Mr. S. Narain, had given, quite a warning signal that it's not the time to take in allocations to small caps. So they've opened it up. So, which also, of course, puts everybody to think that, is it a good time now to invest in small caps? And I think over this time period, while a few fund houses are still moving on with those restrictions on lump sums, a majority of them are open to STPs and SIPs with a very decent sort of a capping, let's say 2 lakh a day or 50,000 a day, which is okay, which is almost like open, but lump sums are still a lot of SIPs are close to. But overall, I think small caps have relatively underperformed the benchmark indices. And during this time period, we've actually seen a lot of small cap stocks fall by 40 to 50%, Alex, from their peaks. So some euphoria is gone. That craze which was there to catch the best performer, I think that's also evaporated. So perhaps, it is time to relook, and for those who've already invested, to continue.
Yeah, some of the data that you pulled up, Prableen, is really very stark from the 23rd of September to the 23rd of February, 14% downtick for the small cap index as a whole. And of course, you can argue that small cap funds, by and large, do manage to beat the benchmark, but here we're still talking about negative returns for quite a few of them. And those that missed the bus really missed the bus. So let's talk about how schemes have performed, right, over the last 1.5 to 2 years, because that's really been the pain point and the period of underperformance.
Right. So, Alex, this 1.5 years, so we'll take September of 2024 as the starting point when we started seeing this correction in the markets. And, just to give a perspective to investors, let's see how Nifty 50 performed in this last almost 1.5 years. So, Nifty 50 is still down 0.87%. And after today's fall, it would be more. Mid cap index is down by negative 2.42%, in small caps, as you just mentioned, still down by close to 14%, 13.94 to be precise. And I think this has been a very difficult time for a lot of schemes. From across the schemes which are available, currently there are 34 schemes which are there in the small cap space, with 28 of them having a track record since September 24. Lowest return is still 19.93% in this time period, this 1.5 years. And the highest for the small caps is still negative 0.46%. So definitely everybody out there who just started investing somewhere around, Alex, in 2024 would have a very low or negative return in their portfolio in the small caps. 2-year SIP, if we see, let's say we say that 24 February you started and now we are in 26 February, the highest returns in the small caps currently in SIP terms is 7.78%, and the lowest is negative 8.17%. The benchmark is down by minus 2.71 in terms of SIPs. And this is also why, Alex, the SIPs do help a lot.